Hey guys, welcome back to my channel. If you're new to the channel, welcome. My name is Humphrey and I make videos here on YouTube on personal finance and entrepreneurship. Today I wanted to talk about a topic that's really hot right now, which is Apple stock. I personally have an Apple computer, I have an iPhone, I have an iPad, I have AirPods. I used to own iPods in the past and I don't really consider myself the biggest diehard Apple fan, which is going to be the theme of today's video. Whether you like Apple or not, Apple is currently trading at an all-time high. And with Apple being such a hot stock right now, trading at an all-time high, that begs the question, is it worth it to own Apple right now? Is it even worth it to add it to your portfolio? The stock split is occurring this week and the prices will be reflected on the Apple stock as of next Monday, August 31st. Apple shares are up 60% year to date, even with the coronavirus pandemic raging on, and in the past year, their shares have actually rose 120%, giving them over a $2 trillion market cap. In today's video, we're gonna go over Apple's most recent stock split announcement, what historically has happened during a stock split. We'll also go over their last earnings report, and then we'll go over a bullish and a bearish case for Apple, and we'll finally end the video with, should you buy Apple stock or not? So first, let's talk about the stock split. Apple in their last earnings call on July 30th announced a 4-for-1 stock split. Now, the official date of the split is actually this Friday, August 28th, which is tomorrow, but the price won't actually be reflected until Monday, August 31st. For each Apple share that you own, you'll get 4 total shares, including the share that you own. This may sound a little confusing at first, but think of it this way. Think of it like you own a pizzeria and you're trying to sell whole pizzas. Now, the whole pizza might be a little bit too expensive for the average customer coming in, so what do you do as a pizzeria? You actually split the pizza into 4 slices. The total price of the pizza remains the same, but the 4 slices are actually going to be selling for 1/4 of the price of the whole pizza. This way, it's actually easier for someone to buy into the pizza and get 1 slice of it, even though they couldn't afford the whole thing. So on Monday, that's exactly what's gonna happen with the stock. If the stock is currently trading for close to $500, on Monday, it's actually gonna be trading closer to 125, it's 500 divided by 4. So that roughly is going to be about $125 per share, and the reason is they want to increase liquidity so more people are going to buy into this stock and also increase trading volume because now there are more shares to go around, and also it's a little bit more affordable for the average investor. So do stocks actually go up after a stock split? I did some research for you, but let's think of it this way first. Just because you slice the pizza into 4 different slices doesn't change the entire value of the whole pizza. It's not like if you split the pizza into 4 slices that the value of the pizzeria changes at all. The fundamentals of the pizzeria and Apple actually remain the same even after the split. Now, historically in 2014 and 2005, when Apple announced their previous stock splits, the stock price would climb steadily in the weeks up to the stock split because of all the anticipation, and then after the split, there would be a brief, significant push in their share price. This, in my opinion, is due to speculation. I believe that investors are all of a sudden anticipating this news. They're seeing, okay, there's gonna be so much more liquidity in the market for Apple shares, and they view this as a good sign because they think that Apple share price will just rise naturally because of that. Also, because of a stock split, the company generally tends to get a lot of press related to the stock split as well, which causes more of a market frenzy and also drives FOMO, or fear of missing out, among other investors. Now, this doesn't happen all the time, but one article seems to detail why stock splits will increase profits for investors. Now, the first reason this article cites is that stock splits draw press and coverage. And if it's in the news more people are going to be interested in the company. I mean, let's think about that. Why are you watching this video right now? Is it because you love me? If so, let me know in the comments. But if not, it's because you're interested in Apple stock. Secondly, a stock split announcement usually comes with a high earnings report, which will just drive the frenzy of purchasing even higher. And lastly, the share price being reduced by 1/4 or whatever it is will increase the amount of volume that happens in the market because now the average investor can all of a sudden afford them. Now, since Apple announced their stock split back on July 30th, their stock has had a significant run up in share price. I mean, on July 30th, it was trading for $384, and nowadays it's close to 500, if not above that. So the question becomes, is the stock price justified? Well, let's take a look at their last earnings report, and I'll give you my opinion on that. Now, in their last earnings call, they actually detailed that their sales were up 11% despite coronavirus concerns. What's interesting to note about their financials in their last earnings call is that services account for 22% of Apple's revenue now. Services include Apple Music, the App Store, iCloud, iTunes, Apple Books, Apple Pay, Apple Care, etc. It's a growing portion of their business, and what I really like about their service business is that it's higher margins than their hardware business. That means as their service business grows over time, they're going to be taking home larger and larger profits just from their service businesses alone. So services are a growing portion of Apple's sales, but we have to remember that their hardware sales are actually still doing just fine as per their last earnings report. If we look right here, the iPhone was up 1.66% in terms of sales year over year. The Mac was up 21.63%. The iPad up 31%, and wearables, home, and accessories are all up 16.74%. Okay, so things look to be trending upward for Apple recently as of their last earnings call, but is Apple still worth the price? Let's take a look at a bearish case first and then go over a bullish case. For a bearish case, the top reasons that analysts are citing for why you should be a bear in Apple stock is that it's trading at a really high PE ratio. Apple's PE ratio is currently nearing 40 versus in their historical run-up from 2010 to 2019, they were trading closer to 10 to 20. So they're even a little bit high in terms of their PE ratio relative to where they used to be. The second point is that the market capitalization seems a bit unjustified. They've nearly doubled their market cap from 1 to 2 trillion in the past 2 years, and the fundamentals haven't been keeping up with the gains. The third reason why bears don't like Apple right now is because there's a subject of an antitrust investigation by Congress. The fourth point is that product revenue is actually lagging. So even though sales of hardware were up year over year, the iPhone market share has actually been declining year over year for the past 8 years or so. One of the last reasons that bears cite is that any recession is not good for a premium priced product. We still don't know what the adverse effects of the coronavirus are on the global economy, much less our stock market. In America, currently the unemployment rate is hovering right around 10%. It's unclear how that's going to affect our economy long term, but if money is tight for people, they're definitely not going to be spending it on a premium price product such as a $999 iPhone 12. Okay, so now let's go over a bullish case and why people are really still bullish and optimistic about Apple. As I said earlier, one of the top reasons to continue to buy Apple is that their service business is actually growing quite a bit. Earlier, I said that services account for 22% of their revenue, but if we look into their financials a little bit further, we actually see that their services margin is 67%, versus on their product segment, it's closer to 30%. So that just reinforces my point from earlier before. As their service business grows, their profitability is actually going to increase. Secondly, bulls are going to say that the top line revenue growth of Apple is still trending upwards. Their annual revenue growth rate is around 6%, which isn't the best, but it's still trending upwards. Compare that to Facebook, for example, who has an 18% annualized growth rate. Thirdly, bulls are going to say that their revenue growth isn't going stagnant anytime soon, especially when you consider all these numbers that I'm going to put up on the screen right now and how much they grew year over year. Bulls are also going to say that Apple has nothing to worry about in terms of antitrust allegations. In fact, Apple actually owns less of a market share in iPhone compared to Samsung, with Apple owning 24.83% in mobile market share compared to Samsung's 30.95%. In addition to that, their market share for operating systems still lacks in comparison to, for example, Android or Windows. So bulls are going to say in order to fit the definition of a monopoly, they actually have to own a large portion of the market. For example, Google owns 80% of search. Lastly, bulls are going to praise Apple's consistent dividend growth, dividend payout, and continually returning of capital in terms of stock repurchase plans. So with all this being considered, should you buy Apple stock? If you have a strong belief that Apple is going to be part of our everyday lives for the next 10 or 20 years, and you believe that the financials presented in today's video actually paints a good and optimistic picture of Apple in the long term, and you want to hold Apple for 10 or 20 years, then personally, I don't think it's such a bad stock to own. Ultimately, I can't decide for you if you should own the stock or not, but hopefully this video gives you enough information to at least start your research with. So do I think it's overvalued? According to financials, yes, it technically is overvalued. However, I don't really know what's going on with the market right now. It's at all-time highs despite all the factors going on in the economy. So if you're a bear and you think that the market will probably reflect the poor economy soon, or you don't believe in Apple's financials, then perhaps staying away from Apple is your best bet. So I hope this video was helpful for you guys. I hope you guys hit the like button if you enjoyed this video, subscribe to my channel if you'd like to see more videos from me, and click the notification bell because I drop 2 videos a week here on YouTube. Let me know in the comments below if you're buying Apple stock, selling Apple stock, or just holding on to Apple stock. I love reading and replying to all your comments, and if you guys enjoyed these like quick analysis and quick dives on a stock, please let me know in the comments because I'd love to do more of them in the future. Also, feel free to follow me on Instagram. I post there pretty much daily, so if you'd like to be a part of there, that's where you can find me. Lastly, if you'd like a free stock from Robinhood valued up to $200, please feel free to use the link in my description below. And that's it for now. I hope you guys have a great day, and I appreciate you guys being here. I'll see you guys in the next one. Peace.